Hello and welcome to the Wendell Effect. My name is Brandon Wendell. I'll be your host for my view of the markets. Before we get started, though, just need to remind everybody we are not broker dealers or investment advisors, and this information from an educational standpoint only. Not telling you to buy, sell, or hold any particular securities, giving any personalized recommendations. Past performance is no indication of future results, and there's always risk involved in the markets, so do not trade with money you cannot afford to lose. And we're also not subject to trading restrictions, so we got a position security initiate one at any time. Please stay in touch with me. Shoot me emails if you'd like to hear something or like me to analyze something in particular. Let me know. I'm not a mind reader. My crystal ball broke a long time ago. So you got to email me to let me know what you like or don't like. And you can hit me up at brandonwendell.cmt@gmail.com. Also at TraderBdub. I'm on Twitter very actively. Still, Elon hasn't kicked me off yet. Anyway, a little heads up for you as well. I'm going to be off next week. I am taking a little vacation for the Thanksgiving holiday and also, more importantly, my wife's birthday. So we are going away. We're going to hide out in the mountains away from the internet and just leave everything behind for a week. So there will be no video next week, but that's okay. I'll be back the following week with some more insights. Maybe some special event. Maybe I'll do something special during the middle of the week too. We'll see. So for today's schedule, I'm going to do our normal weekly market analysis on the equity index futures, then energy. Sector analysis is what we're going to wrap up with. It's a smaller session this time. So starting off for the week of November 20th in the equity index futures, let's take a look and see. The ES has pulled back 61.8% of the preceding impulse. We are still in a bear market. Don't be fooled with these small rallies. You can see last week was very weak, no pun intended, but basically if we break the low, we're going to head to lower. And I mean close lower too, not just head lower. If we break the high, I'll be surprised, but we could continue for more of a retracement. I just really don't see that happening. We could still go as high as 41.65, which is the 78.6% retracement, and still not make a new high, still be in a bearish trend. So I'm watching the momentum. It's still very, very weak. I think we're going to head down this week. Taking a look at the daily chart, we have a divergence. You can see we moved up in price, but not in momentum. You do not make new highs without more momentum and hold those highs. It just doesn't happen. So we should pull back more than this and maybe, again, start the impulses back down very soon. Now, the only thing that's saving the ES so far is when we did pull back here, you can see we went back to a 50% retracement of our preceding upward impulse, and we didn't close with the RSI below 40. Remember, 40 is the threshold for bearishness. So if we go below 40, typically we're going to continue to see more bearish moves. But if you hold above 40, that only happens when you're very bullish. And we have made higher low. We haven't made the higher high yet. So we're seeing a little bit of bullish. I think we're kind of stuck in a sideways trend, to be honest with you. And I think it's going to continue to be a bit sideways for a little while too. Okay. So I don't think that, we're out of the woods yet. You notice I've been saying this in Twitter for the week. We've been sideways, and you can see it. We're kind of stuck between this 3,900 and 4,000, maybe a little above that, about 40.20. And we're just bouncing back and forth, and it doesn't look like we're going to change anytime soon. This is not the leading market, though. The Dow is the leading market to the upside, as you can see. Since October 14th, that's been the leader as we're moving up, while the NASDAQ's been dragging us down. And you can see the NASDAQ made higher lows in early November. We started to rally. But the Dow is failing to make new highs at this point. That could be the warning sign before we drop. We'll have to watch the Dow for the peak. Also, we can take a look and see right here. Remember, the ES went up about 61.8%. The NASDAQ has only retraced 50%. And the RSI is lower, so it is a much weaker index. If you're going to short, you're going to want to short components of the NASDAQ or the NASDAQ itself. That is the leader to the downside, is likely to move further and faster and give you better shorting opportunities. But we have to look to the Dow to let us know when it's time to short, because the Dow is pulling everything higher, and without the Dow showing weakness, nothing can really drop. Think of the Dow as a helium-filled balloon, while the NASDAQ, the Russell, they're lead weights tied to that balloon. Right now, the helium in the balloon is big enough and light enough, it's pulling the weights higher. But if the balloon pops, those weights are going to drop very fast. And that's what we're looking for. So we see the same divergence here. We have higher high in price. We failed to break out above 60 on the RSI. So we see that we had this red candles on Wednesday, Thursday, Friday, but we did have a little buying pressure holding us up. So we didn't collapse on the NASDAQ. So it does look a lot weaker. And again, this will be the index that drops first because we did hit supply and can't seem to get through it. But it can't do it without the Dow letting it. Right now, we're stuck sideways in a little channel between 11,600 and 11,800. As we lost momentum, we're just kind of oscillating right around 50, and price is likely to continue to go sideways until we get more momentum or the Dow hits some sort of overhead supply and just drops. If we see weakness in the Dow, this will be the first index, the NASDAQ, to drop. Speaking of the Dow is at supply. And this is a weekly supply. Look, rally, base, drop right there with follow through. And as we came into that, we've got an indecisive candle with a small body. Buying pressure is a little stronger than the selling pressure, meaning the wick, and where we close in relationship to the low and high. Now, if you don't know what that means, I suggest you go back to some of my chart school videos and I talk a little bit more about price action and how to read it. But the main thing I'm seeing here is that we did that close for last week and we couldn't get above 60. That is showing bearishness in this index. And the confirmation would come if we break the low from last week. If we do that, the NASDAQ and most of the indexes will free fall. And the Dow will get dragged with it. And you can see we even approached it on the daily time frame. And you can use the wicks or the body here. Either way, we hit it. That hits supply zone. And we're getting a lot more red than we had before. That's very weak. And the momentum is dying off. So there's a lot of warning signs, but we can't start shorting unless we break Thursday's low. If that happens, then we're going to free fall. So just kind of waiting for that. Same thing here on the 4-hour. That was a 50% retracement of our preceding impulse, which is pretty strong to the downside. And we're having troubles getting back to new highs. We're even having troubles getting above 60 on the 4-hour chart. So while it's not ready to drop, there's definitely signs of weakness coming back into this market. Well, I mentioned the NASDAQ was pretty weak. So is the Russell. Maybe not as weak because it did do a 61.8% retracement while the NASDAQ only retraced 50% on the weekly chart. But we do see weakness. Red and green mixed candles. That's not a strong bullish trend. If we were going to continue to go up very well, we should have seen more green candles. And same thing here on the daily chart, we're seeing divergence where we fail to make the new highs in momentum, even though we made new highs in price. And we're getting some more red in there too. So price is getting weak, but it can't drop without the Dow letting it. So we did hold supply, the little base drop that we had going on after that divergence that caused the move back down. Well, we've got lower highs. We just don't have a lower low yet to really call a bear market a continuation or a bearish trend. But on the pullback, we did dip below 40, which is bearish. I forgot to see if we did that on the Dow. Now, no, we didn't. See, on the Dow it was stronger, didn't go below 40. If that happens, though, the markets will drop. So the Russell and the NASDAQ will be your shorting opportunities should the Dow start to find more weakness. And if it breaks Thursday's low, the Dow breaking Thursday's low will be your signal that the other markets, NASDAQ and the Russell, are ready to free fall. That's what you want to short. And just pay attention to my tweets this week. I'll be talking about that. Actually, maybe not. I'm going on vacation. Forgot about that. But I might still put out some tweets, especially if things like that are happening. So for this week on November 20th, for the energy market, we're now in January. We've rolled all the way over to January 2023 for the energy markets. Be careful. Make sure you do your rollovers. The volume is now on those contracts. We did have a dip below 40 on the first move down here in September. Now, as we're coming back in and retesting the same demand zone, we don't have the same momentum. So it'll be interesting to see if we're going to be able to actually get through this or if we try to bounce. My guess is that we're going to go a bit sideways here between 79 and 86 until the end of the year. It looks like we're just going to go back and forth for a little bit here. Looking at the daily chart, we had a double top formation that we broke down, and the measured move should take us to 72. I don't know if we're going to get there. We are just barely below 40 here. So it does look like we want to move down, but you can see we retested the neckline before possibly moving down again. We can see if you can get in around this 83 area, I think it's a good short still down to 72. Problem is that we've been stuck being able to get and stay below 76. And again, on the weekly chart, it's been even harder to get through. I guess we did make it down to 74 here, but it just doesn't. I don't know if we're going to make it to 72. It doesn't look like we are. We might have to bail out of the shorts around 76. This looks like it might be a nice little shorting opportunity. We have drop, base, base, drop. Should bring that up actually. CLF. Let me go to the live chart here. There it is. I was doing some India research earlier. Here's my zones, and I'm on the daily time frame. This is what I was just noticing that I forgot to mark off, is that we've got drop, base, base, drop. Now, we don't have the second follow-through candle, but we did breach a prior low, so this 84.62 is a pretty decent little supply on the daily chart to try to take us down to 72. So if we move up there and on the daily chart we don't get above 60 on the RSI, then you'd want to short that. On the 4-hour time frame, there's actually a lower zone right here near that neckline of 81.84, 82.43 they might be able to sell to try to take you lower. But again, we might have to watch for bullish pressure. Look for a divergence. If you get a positive divergence when you come down towards 76, you want to get out of your short and lock in profits. All right, so that's pretty much it on CL. We'll move on to Nat Gas, which still hasn't touched the daily demand. We're getting a bit of a retracement. You can see we went back about 38%. Doesn't look like it's done retracing yet. You can see we're putting in a little bottom right now, but we're not below 40. So we might be picking up a little more momentum to go higher for this week. So I expect us to have probably close a little higher. I don't know if we'll make it to 7.3, but we're going to try to make it above 7 by the end of the week. So looking at the daily chart, you can see we punctured that supply zone when we pulled, and we couldn't get above 60 when we did it. So that's why we fell back down, but we haven't gone below 40. This is suggesting we're either going to go a bit sideways for the week or bullish pressure might pick up. If we can make another low without going below 40 or even below the previous low, right here at about 6.1 or 6.2, then we're likely to break out, and my next target would be 7.984. That supply overhead and 50% retracement area. So look for some bullish opportunity in Nat Gas, again, in the January contract. If we do go lower, we're going to run into a little bit of demand anyway at 6.3, 6.1 on the 4-hour time frame. Lots of bullish pressure there, but this may turn into a demand. We have drop, base, rally. It just hasn't followed through yet. So I can't call it a demand yet, but it may end up forming some sort of buying pressure there. We're still having trouble getting above 60, so if we can get above 60, then we should go up, possibly bounce off the 7 area before, we have to test this supply and probably fall down a little bit before we can get through it. So I wouldn't be surprised to see a pullback from 7 down to 6.3. There might be a nice little kind of counter trend short before we go up higher. I'll keep an eye on that for this week as well, maybe tweet out about that. So gasoline on the weekly chart looks like it's still trying to drop. We had a big bearish week last week, and you can see that we retraced 50% of our downward move and are now impulsing down towards my target of 208. Wouldn't that be nice before I fill up my car tomorrow? Anyway, you can see on the 4-hour chart, we actually had a head and shoulders right here. I forgot to mark it off. There's the right shoulder. You can probably see it right there. Left shoulder, head, right shoulder. I think we made the measured move. Either way, we hit demand, and we're just at 40. So demand is holding right now because we closed above 40. If we had closed below, I'd expect it to break. So we failed to make the... Did we make the measured move? Let me take a look at this, actually. Again, I'll go to my live chart here. So RBF 2023 on the daily time frame. And yeah, I have it marked right here with the head and shoulders. Actually, on the 4-hour, I marked it, but you still see there's the measure move that we did not hit yet. We failed to make the measure move, and we're bouncing a little bit right now. So I did do it on the 4-hour. Let me just go back to my chart here. There it is on the 4-hour. And you can see we made an extension. We have impulse correction extension of 1.272. It looks as though we may just pull back to 2.4 before we drop again. So shorting at this 2.4 area might work out, with the target being the 22231 or even 22081 below it. But somewhere in that area is where we're likely to find ourselves by the end of the week. In heating oil, we're pretty much going sideways. You might want to look somewhere else unless you're playing intraday opportunities. It's just kind of going sideways. You can see the indecision here as well. On the daily chart, we had a negative divergence. We reacted bearishly to that, but we still haven't gotten below 40. So we may end up stalling at the bottom of this range here. And we're just kind of back and forth in this little range between 365 and 335. So just be careful there and make sure you play inside of that. We're likely to see a little bit of bullish moves. You can see we bounced off 3.3040, so we had an overshoot of the sideways range and are now moving back up. This will be the test right here, 3.46. If we hit that level and we're above 60 on the RSI, we'll break through and then move up to 3.5888. If we're below 60 on the RSI when we hit the 3.46 on our 4-hour time frame, then you can actually short that, and our target should be 3.18. So we could get another kind of move down to possibly be another false breakout of our range. But yeah, the key will be, do we have enough momentum to break supply or do we not? So moving back into the stock market for the week of November 20th, let's take a look at the stock market analysis. Looking at the last 6 months, this was last week's, and you can see the energy was up 22.4%. It was weird because we didn't really have a safe haven securities doing well. We had energy, obviously, for inflation, but also industrials performing quite well. Well, what a difference a week makes. Notice this 6-month pattern now, we went from this to this. So what happened? Well, we got a little more on industrials. We lost on energy a lot, 6%, and we gained on consumer staples. This is what you normally see as people are starting to panic before a market drop. You start to see an increase in staples, healthcare, and utilities. So taking this to last week and just the weekly view, look at what was bullish. The only sectors that were bullish last week were the defensive sectors, staples, healthcare, and utilities. So that means that the big institutions are seeing the writing on the wall, if you will. We've been escaping the big crash so far, but their fear is that it's coming very, very soon. Santa Claus is not coming to town. It looks like the Santa Claus rally might not happen. And that's what the institutions are predicting by their moves right here, at least this week. We'll see if this continues. We need more than just 1 week for this to be a real call, but it looks as though there's a flight to safety. And you can see this week's performance. We had some cyclicals, very, very red there on Amazon and Tesla. Lots of news, obviously, with Elon. And healthcare, you can see, was very bullish. So every time that Elon is mentioned, I guess we have to take more drugs. I don't know. Anyway, let's take a look at the sector ETFs and see what we might be able to invest in. As far as XLY, consumer discretionary, you want to stay away from that. It's very choppy. We're stuck in this range between 148 and 132. It's a wide range. You could play inside of it, but we are kind of failing to make the lows right now. We're losing some momentum and may just drift aimlessly for a little bit. It's not the sector to really play. Unfortunately, I warned about this. We did have that move down from our entry here on the communication sector for short. We have a positive, it wasn't positive divergence, just was a move up. And we failed to get above 60, so it looks like we're going to make another drop. We unfortunately did not hold supply. I thought this was going to be another entry opportunity in supply, and you can see we opened up, moved very deep into it with that gap, and just ended up breaking it. So now we're coming back down, and some people are, I don't know, taking their profits at break even or somewhat. We're just, I don't know, it looks like we're getting ready to go down more. So probably got stopped out even if you were in a win. I told you to watch out and possibly take profits down here. But I don't know if it's going to continue down. I think that we just have to go to something else that looks a little bit better now. The technology sector, we had a negative divergence, pulled back a little bit, but believe it or not, technology still looks a bit bullish, even though you got things like Apple moving down. I think they're in the communications, though. But you can see that this seems to be a bit bullish and wanting to work its way up higher. We're still finding bullish pressure and not going into bearish territory, but it's going to be very slow. Just be patient. Let's see what else we have here. Building materials, or XLB materials, you can see we've had a bit of a retracement down to 23.6, or a little bit beyond that, actually. And momentum is still there. We didn't even go below 60, let alone 50 or 40. So there's plenty of bullish momentum, but if we make a new high this week above 82.26, we need to have more momentum. If we have less momentum as we break that high, that would be divergence, and that would give us a warning sign that the market is going to drop in the material sector. Energy, I've showed you that little pitchfork here that was showing a channel to the upside. We're really just kind of channeling right along that previous trend line. And you can see we were kind of oscillating on either side of it, but we had a big divergence, and that's why we pulled back. The market is fighting. The sector does not want to go down, but it's going up very slowly. Inflation is still there. PPI number came out this past week a little bit better than expected, so the market reacted to that to the upside. But I still think that it's a problem that is going to be tackled by the Fed. We may get another three quarter per point, 75 basis point rise on the next meeting. They're going to be aggressive towards that inflation because they're really saying it hasn't had much of an effect, the work that they've been doing. Surprise. I mean, they're a little bit late in getting in and doing something about it. That's pretty typical of the Fed anyway. So with this, I'm looking for better opportunities elsewhere. I don't think this is a great trade opportunity. We're just going to be very choppy here. The consumer staples are breaking out. You can see we end up holding this supply for a little bit, but then we gapped up on Friday with more momentum. That's for real. That's a breakout. Now, I usually wait for a close above, which we've just had, and a retest of this broken zone, so then I know it's good demand. But it looks like we're going to have that and either move to the 76.18 this week, or if it becomes extremely bullish, then we could get as high as 76.71. But yeah, I see bullishness this week in the consumer staples. Again, more flight to safety. Healthcare also is continuing its flight to safety move, but we're losing momentum. You see right here, we made a new high without the momentum, and we pulled back. Well, we're about to try to make another high again, but we got to make sure we have more momentum. If we have less, then we should do the same thing. We'll pull back. If we have more momentum, then we'll finally continue to move up to the 138.42. Keep an eye out. The utilities had a really good bounce off this weekly demand, stalled first at the 23.6 retracement, made it to 38.2, and now it's working its way up to 50%. It's just stair-stepping up. We still haven't gone into a strong bullish momentum here, so we'll have to see if this is the end of the upward move. Really is supply here too. You had drop, base, drop, and that's where we ended up hitting the bottom wick right here. You see my dotted line of price. That's where we ended up closing Friday, and we can't seem to get enough momentum to go higher. So I would expect us to kind of stay sideways between 67 and 69 for the next week, just like we did last week. So more of the same, unfortunately, in utilities. And financials, we actually broke out and made a high while the RSI was way above 60. So we just had a small correction, but we're looking like it's going to go higher here. Believe it or not, financials should not normally be doing well in this kind of market environment, but it is. The charts don't lie. So it looks as though we are going to continue to move a bit higher when we retest this high from Monday, I believe that was. Nope, that was last Friday. Yeah, Monday, Tuesday, Wednesday, Thursday, Friday. That was last Friday. We need to have more momentum. If we come up to that 35.97 area and we don't have more momentum on the RSI, look out below. We'll get a pullback probably to 33. But if we do have more momentum, then we could continue higher to 36.56 or maybe even up towards 38. So it'll be interesting to see when we get there what we need to do. So watch that retest of last Friday's high and watch your RSI on the daily chart. Real estate also did a nice retracement back, but we're losing momentum. Again, if we try to make a move to beat that high from last week, you can see we need to make more momentum in order to be able to continue up. Otherwise, we could finally see a breakdown and continuation of the previous impulse downwards. Well, one of the things we were looking at was Welltower, and unfortunately on Tuesday we gapped down into the zone, and when we did, we actually broke the zone. If you had a big enough stop, you would have been okay getting in, but it was very difficult to try to play that. Even if you did percentage, like say 10% of the daily ATR, that would have still stopped you out. And it's unfortunate, but it doesn't look like we're going to get, we didn't go into bearish territory. We could potentially continue to go higher. This may work out, but again, you probably stopped out if you try to take that because it did break below 66, and it's just nothing you can do. You can't give it unlimited stops. We got to be able to call it somewhere when we're wrong, and unfortunately, it just shook us out. So, continuing on some of the old trade ideas we were looking at, Microsoft unfortunately is stalling out at target number one. You can see it pulled back and let us in. We were below 60, I'm sorry, below 40 on the RSI, so we're stalling before making a new high, and that's because we started our move up from below 40. Well, this is just a small correction. It looks low. If we can break out of this high and, of course, get above 60 at the same time, then we should be able to travel up towards target 2 this week. It won't hit target 2 yet, but it looks like it's going to try to make a run at least to try to break this prior high from Friday of last week. And again, we just need to make sure we're above 60 or at least above the previous high here in the RSI for the momentum to carry us higher. Otherwise, we'll go sideways. Nike was another one, unfortunately, never pulled back into the entry, so there's nothing much we could do there. Probably just going to have to abandon this because it's taking too much time, and seasonally, it's about done. And Home Depot, same thing. You can see we never pulled back to get into our entry. We did see a little bit of weakening of the momentum, but we're pretty much just going sideways now, so I'm not going to waste time or effort on that. If it's not coming into our entry, we just move on to something else. And Disney also failed to get to our entry for the short. You can see we are seeing weakness already and stalling going back down. Unfortunately, I don't know if it's going to get to 100 to let us in. So either you go to a smaller time frame or just pass on the opportunity, look for something better. So that's what I got for you for this week. I want to thank everybody for being here this week. And if you got any questions, of course, stay in touch with me. Actually, before I bring that up, let's go to my next page. I think there it is. Email address, brandonwendell.cmt@gmail.com. If you want to stay in touch with me, you can send me requests, securities you'd like to look at, and then you can also hit me up at TraderBdub or Twitter, and I'll be sending out some tweets during the week on some of the charts I might be following as well. It will be a little bit sparse. Excuse me, I can't speak today. It'll be a little sparse because I am going on vacation, but I will be checking emails while I'm on vacation. I'll join you again next week. So until then, happy Thanksgiving to everyone, and I will see you again. Trade safe, trade well. Take care.